everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our big markets and formulate an attack plan for tomorrow's trading. Now, starting off the month, kind of lackluster. There really wasn't a whole lot going on today. Crude oil obviously didn't have a problem moving, but everything else was really choppy and slow and sort of grindy. Gold had some decent distance in it, but not a whole lot of consistency. I'm really hoping that this isn't the way the rest of the month goes. Fingers crossed, though, as we approach towards the end of August is usually when things start picking back up. But we may have to deal with those summertime months a little bit longer here until we start getting some more consistency. So a lot of the same, really, from what we're seeing in the markets today, kicking off the new month. Now, as always, before we jump on in, make sure to swing it over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. That's going to allow you to sign up for our email list so you'll know every single time one of these videos comes out. Along with that, we talk about all kinds of different stuff inside of there. Stocks, cryptocurrencies, Bitcoin's going through a little bit of stuff lately, right? We've got pretty much, if it moves, it's going to show up in that newsletter at some point. So it's great to get your hands on that. Along with that, if you haven't done so already, make sure to head on over to the live trading subscription and trial info, where you can sign up for a 3-day trial and you can hang out with us in the room for a couple days and see what we're all about. That'll give you kind of a good view into what we're looking for every day and just see what we're doing, right? You'll be able to communicate with all the members, you'll be able to see my charts and the trades that we're all looking at, etc. Just, it's a really cool way to see what is all going on. Of course, if you do enjoy it, you can sign up for a weekly or monthly subscription, and if you join as a full-fledged VIP member, you get the live trade room as part of the package. Now, taking a look overall, we have the euro, which is, for the most part, doesn't really have a whole lot going on. In terms of the overall movement, I think it was okay, but we're really just kind of stuck in this range. If we zoom out a little bit, we can see it kind of makes sense, right? That big spike up that we were talking about, a little bit overzealous on the highs, pulling back. They didn't get that continuation to the upside, and now we're just seeing a little bit of a range. This could be the buyer's attempt to try to get in at much better prices, and those better prices can be really in a lot of different places. It sort of depends on how the market wants to respond to this. But overall, you have the potential low coming in across the bottom here, but you also have a potential retest of these previous swing highs. All of this major area of support in, well, now in this case, resistance turn support, we could be looking for the market to want to come back down and find more buyers in that area before pushing back up. And that's right around that 18,000 level as well. So plenty of support if the market does want to continue lower, but at the moment we have a bull trend in place and we're looking to buy low, sell high in the range, stay out of the middle with a preference on buying low to stick with that trend. So the overall movement, really just waiting for it to dip down to the lows, right? 18,230 or lower if we want to start dipping below the overall low and dig back in towards that 18,100 would be a nice area to start picking up some potential buying pressure to push the market back up towards those highs once again. Outside of that, though, we're just kind of floating around in the middle and not really a whole lot to do on the euro until we start getting some movement. Now, swinging on over to the gold market, gold for the most part, lots of movement, but not a whole lot of consistency. We had an attempted drive lower that ended in a 3-push wedge bottom, trapped and shot right back up to the upside. Huge reversal all the way back up again, and then we ran out of steam at the highs and are starting to turn back down. This leaves us with a situation where we could easily just start winding up with a gargantuan range on our hands, but given the fact that we are sort of dealing with this earlier range that was inside of here, and that did hold pretty well, it does kind of make sense to look for that area to become a sort of a location of interest, whether they're deviations above the highs, below the lows, etc. This is obviously an area of interest. So if we drag this down a little bit, we can see that they deviated lower, didn't do really so well there before they trapped the bottom and they couldn't quite make it to the next one down. So if we go the opposite direction and say, all right, well, if they want to try to go higher, then that is also a potential case, and you'll notice that's exactly where the high came in. So even though they didn't respect the low very much, it does appear as though they're trying to hold those highs a little more aggressively. And again, that is a little bit of a clue that we might end up with just a big old range. Until then, though, on this little dip lower, we do have intermediate support on the way down at 74.4, 72.9, and 70.9. All areas of potential bouncing, just like we had over here. A lot of times you don't get that static swoop all the way down. You get nice bounces on the way lower. Even on the rise higher, we still had some bouncing to the downside. So you're expecting a couple roadblocks on the way lower. But the bigger picture, well, we've moved to a new low, new high, new low, new high. They failed. We're probably going to roll over and make attempt at those lows again. So that's really what I'm looking for right now, is not necessarily looking to buy off of these levels, but to use these levels as potential areas where the market may stall out, look for a trap, and then sell it right back down again. Push the market down, stalls out, look for a trap, and push it back down again, etc. until we can get down to those lows once again. Now, a lot of times, given the big reversal that we had off the bottom, sellers may be looking for two major areas. The lowest close that we had in this move, which is at 69.4, or the overall low down at 68.4. And either one of those could potentially be major areas of support if the market wants to try to push lower and get kind of held up on the way down. So right now on gold, we're kind of in the middle. We are bearish in the short term, and given the overall picture of fading off of all of the ends, looking more for this to sell right back down to a new low. Over on crude oil is the mover of today, and a lot of that movement happened towards the end of the session after 11 o'clock. Big drop lower on crude oil that just kept going and going and going. Now, we do have the API numbers coming out here in about 8 minutes as I'm recording this, so that can obviously change things a little bit, but we have a huge level of resistance at 49.68, and that is basically seeing when the market comes back, if it comes back up to where that monster sell side push came in. Do the sellers want to defend it, right? We came back into this area. They obviously rejected it with quite a bit of steam in the tank. So what happens if we come back, right? If the market comes back to that area, are the sellers still interested? Do they want to keep it going? Or are they going to try to get it going, fail, and then we can use it as support and go the opposite direction? So this 49.68 is kind of a line in the sand in terms of what they want to do. Earlier levels before that, 49.40 up to 42, and then above that at 49.99, all areas of potential selling. The market is definitely still bearish, and if we zoom out, we can see that they are taking back a lot of this bull rallying that's been going on. This bull rallying tried holding it, they broke through it, they used that as resistance, and we're diving down. It wouldn't necessarily be a surprise to see them make an attempt at some of these earlier swing highs, which we've already hit, but also some of these earlier swing lows, right? See them try to contest some of these major swing lows that were put in, especially this one. And from there, we may find that we have a two-legged correction down into that level of support coming across, and then see the market roll right back up again towards those highs. At the moment, though, we are definitely bearish, looking for the sell side, and unless the API comes out and throws that for a loop, we have plenty of areas to look to try to sell into. It's just a matter of if the market wants to be kind enough to give those levels to us. And then finally on the S&P, once again, not a whole lot going on. The S&P very sideways, very range-bound, mostly a wedge today without a whole lot going on. And if we look at yesterday, we can see that they really weren't even able to get outside of that. They tried breaking out above it, failed. They couldn't even come back down to the lows. Another really shallow, kind of lackluster day. We have rising support coming into play that held earlier this morning, kind of in the middle afternoon area, and now we are running into the potential of these highs coming into play. So a lot of levels of resistance and a lot of levels of support all stacking up in the same place, and you could probably even widen that out now. So not only do we have the wedge from today's price action, but we also have the much larger wedge that's been going on over the past couple days, and that gives us a clue that we are obviously range bound, but that there may be a little bit more of information to this. Now, if we zoom out a little bit more, that's where we're going to find that info. So let's go out to let's try a 30-minute chart, bump out to that, and we can see pretty plainly that this is obviously a bull trend. And a lot of times what you'll end up seeing is you'll see this big move up, then you'll see the market go into a little bit of a flag, and then we break out with continuation higher. And that does seem to be kind of what we're looking at right now. We have the bottom coming in, and now we have the top coming in. It looks very flag-esque. And now on top of that, we're also forming a little bit of a wedge in here. It looks pretty good to get one more attempted push down, especially if that is a trap and a failure. We could be looking for that to roll over right back to the highs once again. But for right now, we're still in a range. We know what to do with a range. Buy low, sell high, and stay out of the middle. And right now, we are pretty much right in the middle. So not a whole lot we can do here until we get some movement into better prices for us to kind of work with. So at the moment here, just in a range, looking to buy low, sell high, and I would like to see that dip down to contest that 24.57, see if you can get a trap there and then push the market right back up to those record highs. So that's going to do it for the outlook. Now, in terms of news tomorrow, we do have some things to worry about, kinda, sorta. At 4:30 tomorrow morning out of the UK, construction PMI for July forecasted at 54.5. At 8:15 tomorrow morning, in the US session, we have the ADP non-farm employment change for July, forecasted at 185,000. Previous was 158. And then, of course, tomorrow being Wednesday, it is crude oil inventory day tomorrow. So 10:30, crude oil inventory is forecasted at a negative 2.95 1.57 million. The previous was a whopping negative 7.208 million, so it could definitely get a little bit interesting. We have the API coming out in a little bit that will give us a little bit more of a clue in terms of what to expect, but for right now, well, I think it comes down to the fact that, like we always say, we're going to have to make a plan, trade the plan, stick to the rules as best we can with how slow these markets are. Stay patient, and you'll be all right. Until next time, we'll see y'all then.